Coffee with sound. There we go. Welcome to Charts and Coffee, gang. Good to see you all. All right, so we have a pretty busy week still to come. Let's jump on over to the economic calendar before we jump into the questions. And let's see what we have here. All right, so as we take a look at the economic calendar, yesterday, remember, there was a bank holiday throughout everywhere but here, it seems. The bank holiday that we were dealing with, and oh, here we go. Thanks, bot. Yes, it's working now. Hey there, free trading room. Good to see everyone. So welcome to Charts and Coffee, and we're just jumping in to the economic calendar, taking a look at the Forex factory calendar. So the one thing that this calendar will not show us, gang, is the fact that we've got really earnings season legit starting this Friday. So when I scroll through all this, we know we've got a number of FOMC speakers. We see 1:30, we see 6 p.m., we see 7:30. So two out of three of these are going to affect really Wednesday more so than today. And Gouldsby is going to affect the second half, the afternoon session. But heads up, we are dealing with an environment where the Federal Reserve has publicly stated that those rate cuts are not their base case. But remember, there are contingencies. So if you've already read this week in the market, in the current issue of TWM, I talk about, well, there are some contingencies. And I lay out some different realities from a data perspective that might force their hand, right? And what are those things? On one hand, we could say, well, recession, right? We could say cooling economy. We can say cooling jobs market. But on the other hand, what would that rate of change then force the Federal Reserve to do? And everything is just really right now a game of chicken in terms of at what point do we have a Federal Reserve pivot, right? And every time I think about that, and I'm so dating myself, Footloose, the original one. Don't you love when Hollywood keeps rebooting movies that they did perfectly okay the first time around? And there's that scene of the chicken with the tractors. And Kevin Bacon's trying to jump out of the tractor, but his shoelace is all wrapped around the pedal. That's kind of what I envision right now. I don't know. That's why I keep envisioning, but I guess that would make Jerome Powell Kevin Bacon. That is where we are. And a lot of times, again, it's really psychological in terms of what it is that we as a public are communicating to the Federal Reserve via the way we're trading bonds, via the way the Fed fund futures and so forth are trading. Okay, so I think our stream is working all right, but I don't know if the comments are working today or not. So if anyone does have any questions, feel free to type them in, or maybe the caffeine hasn't kicked in yet. All right, so let's see what else we've got coming up. So today, Tuesday, 3 different FOMC members going into tomorrow. Well, tomorrow's where the data comes in. Tomorrow's where it gets interesting. CPI. Now, CPI is going to land right in that inflation column of our macroeconomic study. If that continues to level out, if that continues to perhaps cool, that's just less reason for the Federal Reserve to keep on with the hiking cycle that they are on, right? And then FOMC meeting minutes. This one's going to be interesting, and I say this for one reason. We've already heard some discussion that the previous meeting, the most recent one, was far tighter, was far more tight in terms of what ultimately did happen, and we'll get to hear some of the reasons maybe the members were not looking to hike. Members, the ones that did hike, what was their argument? The ones that did not want to, but ultimately might have conceded, what was their argument? Remember, we are still expecting one more hike in May, and that's fine, right? We already know, we as in the trading public, we already know it's here in the May 3 data, 72%. This is the highest expectation we've seen so far for a quarter point hike. So it is coming. That's going to be the quarter point hike for the May 3 meeting. So that means very likely the current target rate of 4 3/4 to 5% is going to go to 5 to 5.25%. So everything from there forward, we can have a better idea of what to hold versus what's a hike. So that means in June, this is what? Well, that's a hold, right? When we go out into July, mostly, that's pretty much 50-50. It's pretty much tied. But this is the hold column, right? This is, sorry, negative, right? So used to thinking about hikes. This is the cut. That's a 1/4 point cut. In fact, that right now for July minorly is ahead, right? But where does it become far more convincing? Move out to September, far more convincing, right? So by September, by the beginning of Q3, whether the Federal Reserve does it, don't care what they said. They also said inflation was transitory. Remember, they're always going to be data dependent. They can change their mind when they can point to the data that justifies their logic for doing whatever it is they're going to do. So that is what we've got right now in terms of expectations from the Federal Reserve. And that means it's priced in, right? That means it's already in what we expect from them. Priced in means there's not a surprise. Yeah. Okay. So a question here from Earl, who asked, to what extent do markets bottom after Fed rate cuts? Earl, great question. So one of the things that I dove into in this issue, the April, what was yesterday, the 10th, the April 10 issue of TWM this week in the market. The thing that we dove into in that particular, we had 5 pages, right? So I think, oh my gosh, Rog, it's a lot of reading. It's a lot of reading, maybe. It's a lot of pictures, right? The whole idea is to give you all a data-driven, rate of change look at what's happening in the big picture, if you want to call that macro. That's cool. So one of the paragraphs, and I'm trying to find it here so I can quote it exactly. And let's see, we went into the CRE, that commercial real estate conversation. All right. So let's see. I know I talked about it and I don't recall where, but ultimately, and it might have been under game plan, but ultimately what happens when we get rate cuts? A lot of folks will cite, oh, after the cuts, the markets tend to go down. That's not actually true. The only time that happened in recent memory, and I, from a first person perspective, right? I've been in the market since the late 80s. 2000, March of 2000 is really the only exception. So I'm going to read right from here. If the Federal Reserve decides to pivot in July, or most likely September, as the Fed fund futures reflect, then the question arises as a consequence, right? What's the consequence to the indices and equities? All right, when the Fed pivots, in other words, they stop, in this case, hiking rates, it's bullish. No matter what anybody says, it's bullish. Stocks historically rally the month of that switch from hiking to hold to that dovish pivot. Now, remember, they don't actually have to start cutting. They can just basically communicate to the market they're no longer going to hike. So that's what I mean by hold to a dovish pivot in messaging. The rally continues for that quarter and often a year after the pivot. So the exception, right? The exception is March of 2000. And that time, the market did not rally after the pivot. But what was happening in March of 2000? For those of you who are trading like myself, that was that funny little .com bubble bursting, right? So that was the exception in basically sort of modern markets. And so, yes, do they bottom? Well, they tend to rally. They tend to rally. So I guess you could say they bottom, right? So Earl, thank you for the question. And that's the way we addressed it in TWM this week, amongst many, many, many other topics. All right. So let's see what we've got here. Good morning, good morning, good morning. All right. So let's go take a pulse of the market here together. And market pulse for me, taking a look at the market, is actually 3 markets. We're going to take a look at ZB, 6E, ES. And first up, ZB. And I'm just going to move the hourly out of the way. We can keep an eye on the 5-minute chart here. We're going to be day trading in about 19 minutes in the futures room and in the sector secrets mastery. And so ZB, what's going on here? Gang, we are still nicely positioned above the 200 propulsion. That is the 200 exponential moving average and its interaction with the 8 exponential moving average. And that's these white dots right here. If you're wondering what the green dots are, that's the 21 exponential. That's where it would be. We're still above the 200. We're in a neutral environment, but we are bullish momentum. So the top row is momentum. The bottom row is trend on those two rows of colors we call the multi-trend. Ultimately, I am looking for support at the 200. I'm looking for the ZB to continue higher, which means yields are moving lower. All right, let's move on to looking at the US dollar through the 6E. This is the easiest way to understand what the dollar is doing because the dollar, as most of these groups of stocks are, the dollar is a group of currencies, but it too is high concentration weighted. And it's 58% euro in that dollar basket. Anytime we're talking about currencies, gang, we're always talking about one currency against the other. That's why the foreign exchange is called the foreign exchange. It's never, well, this is what the dollar is doing, or it's never, this is what the euro is doing. It's always, what is that currency doing against another currency, or in the case of the dollar, against a basket of other currencies. It's always a relative performance. It's always a comparison. It's always a contrast. Euro is in an uptrend, gang, and I will tell you this. That means dollar is in a downtrend, period. And, one of the things I wanted to do today is use the trading view charts. Because I got a lot of folks saying, Rog, I don't use TOS. A, either don't want to, or B, cannot. Yeah. All the indicators that I use and love are on trading view as well. So here's the dollar. Look at the downtrend on the dollar. This is the DX futures contract. Here's the 6E futures contract. See how they're showing us that look of, hey, this is a bullish market. And as long as the euro continues higher, a series of higher lows is the backbone. Higher highs are great. Higher highs are what get the attention. But the series of higher lows, right? That's the backbone of an uptrend, just as a series of lower highs. That's the backbone of a downtrend. So that's really, really important. And so that's the other market I like to look at. And lastly, I'll just take a look at the S&P. It's a nice way to look at a little bit of Dow behavior and NASDAQ behavior based on weighting. And you can see here on Trading View, really interesting volume ledge we've got here. In fact, let's squeeze in 2023. Take a look at your volume ledge right here. Gang, price-based volume. This, when I say ledge, you see how we have these right there. That's a volume ledge. That's another volume ledge. In fact, that's the most important. That's the point of control. And maybe a minor one down in here. But this is where we seem to be making significant decisions. Why? That's where the most contracts are traded. That's not the day, not the time. What price were the most contracts traded? So if you're using a historical, if you're using, say, volume, and you're looking at the history of volume based on time or date, that's okay. But wouldn't it be far more interesting to know where the volume has been accumulating? And that's what volume profile, when you've got that histogram down the vertical axis of your chart, far more telling. You can see where the ES is right now. We are trading minorly above yesterday's close. So a little bit bullish. We're on the bullish side of what I like to call the line in the sand, which is the previous session close. All right. So that's what we've got kind of on as the market pulse of the market, ZB6EES. And let's go ahead and jump into questions. And you know what? Let's stick with the trading view charts here. I have the trading view charts up almost all the time. They're always on the phone. And if you don't have even a free account with TradingView, it's a great platform to have, gang, handy. And a lot of the simpler indicators work on TradingView. Like I said, all of mine do. I'm a big fan. It's broker agnostic, right? They work with a lot of brokers. You can use, for example, let's say you like Tasty, and you think, you know what? I don't really use their charts. I mean, let's be real. However, I love the platform, but I need my simpler tools. TradingView, Tasty. That's a cool combination. A lot of members like that. Okay, let's see here. First up is good morning. Let's see. PayPal. PayPal. All right, let's take a look. I'm looking at PayPal here. This is the daily time frame of PayPal, by the way. Yeah, daily time frame of PayPal. And what is it that we're looking at? Still a very, very, very range bound chart. It's just bouncing back and forth. Take a look at the point of control. That's an interesting level. It if you're looking to dig your heels in anywhere, that is definitely an interesting level to keep an eye on. And then if we have a reason to be bullish, and I don't know how I keep changing this darn price. I'll have to go back. Sorry, gang. You know what? I don't know what I did here to make the price so weird, but that's something I did. It's not TradingView. You can see the point of control right in there. I would keep an eye on that. If there is going to be a pop, as you've asked there, my friend, whether that's a momentum-based setup like a squeeze. I love the narrow range it's in. That would make sense. I like that we're in a sideways range. That's obviously one of the two environments that's very conducive to a squeeze. Squeezes also work really great with short-term consolidation in a trend. So whenever you're finding your squeezes are really firing and following through in a supremely awesome way, it's usually going to be small consolidations within the context of a trend, which is not what we have here. I would be pretty much expecting a move to about the lower edge to the upper edge of the daily price movement range, which is that yellow zone you see on my chart there. So if we do move higher, ideally off the point of control. So I'm still buying support. Even when I've got a squeeze situation, I'm still buying support. And then I wouldn't expect a whole lot more than an initial move to the lower edge of the daily price movement range resistance, which is your volatility-based resistance zone. All right, next question was snow. Sure, let's go take a look at that. All right, so if we take a look at snow here, and as far as structure goes, it's another sideways market. Again, take a look at your point of control. If trading is about positioning yourself, if trading is about, how can I position myself in the best way to first control risk and second capitalize on movement? Again, I haven't talked enough about price-based volume lately because while I love my volatility tools, I love them. Hourly price movement ranges, HPMRs, daily price movement ranges, DPMRs, they work really well in environments like this when coupled with volatility and volume together, when you couple those things together. And ultimately, what I'd like to see as I move through what's happening here is just a better place to dig my heels in, right? This is not a bad area, this low around from Thursday's action, but anywhere close to that point of control would be far better for me, right? And that means a lot of times I'm waiting, right? That means a lot of times I'm waiting. As far as ZB goes, am I open to a long swing trade? I'm going to see how David, I'm going to see how we open and what kind of mood the ZB is in, but I would not rule it out. I would have loved to have seen more volume there, but I would not rule it out. We might end up day trading it, but we are starting to creep into that more bullish look at bonds. Yeah, we're absolutely starting to creep into a much more bullish look. I'm jumping on over to toss here. And so if we're starting to transition to a little bit more of a bullish look in bonds, then that 200 looks even better. But yeah, I would not rule it out. Would I like something closer to the DPMR? Absolutely. Absolutely. Yeah. All right. Okay, gang. So just like that, thank you as always for being a part of Charts and Coffee. We'll be back here tomorrow, same time, same station. My Simpler Futures folks, my Sector Secrets Mastery folks, I will see you all in about 30 seconds. Be good to each other, gang.